Hello, I'm Kevin Flynn, and welcome to another edition of Avalon's Market Minute. It's July 6, 2013, and I hope you all enjoyed your holiday weekend. After a difficult June, stocks were up for a second week in a row last week, helped along by the first of the month rally, the 4th of July run-up rally, and a jobs report that was ahead of expectations. It needed a little extra help after events in the Middle East ran up the price of crude oil. There was some other help from overseas, too, when European Central Bank President Mario Draghi flirted aggressively with the markets at his press conference on Thursday, declaring that there was lots more the central bank could do, although it has actually done almost none of the things it has said it could do in the past. But these days, the markets are more like Peter Pan. They just want to believe. As long as I'm talking about fairy tale characters, let's not forget Goldilocks, who should be enjoying her visit with the stock market for a little bit longer. Although the jobs report did come in above expectations and included upward revisions to the last 2 months, my own analysis of the underlying data suggests that the job market, in fact, is not really doing any better than it was a year ago, although I don't expect that view to prevail with the media or on Wall Street. Indeed, initial media reaction just suggested not a little amount of infatuation with the report, and that should color sentiment both on and off the street for the next couple of weeks. Although Alcoa kicks off the earnings season on Monday, it's no longer a market bellwether. It might be more accurate to say that JP Morgan kicks the season off on Friday. But it doesn't really get going until the week after that. And though I expect earnings season to be quite mediocre, the cumulative weight of that won't be felt for a couple more weeks yet. In the meantime, you can expect the usual breathless stories about companies beating estimates. Keep in mind, though, that estimates are designed to be beaten and that 2/3 of companies beat them every quarter. What's more, most of the bigger companies are reporting little to no growth in revenue or net income, but are managing to raise earnings per share, primarily with stock buybacks and to a lesser extent cost cuts, although there isn't much left to cut anymore. So the markets will want to keep going up during this halo of Goldilocks period. There are a couple of problems lurking in the shadows, above all Egypt and the rest of the Middle East, and of course there's always Europe. Nothing seems imminent from either place, but then there's a reason some things get to be called surprises. I'm Kevin Flynn, and thanks for listening to another edition of Avalon's Market Minute.